Hey everyone, hopefully you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to rip through Twitter, see what people are talking about. I'm going to give my financial opinions across the board. And if you guys need any help with anything, check out finding-value.com. So let's dive in and see what's going on. And again, if you want to follow me on Twitter at finding_finance, we're going to jump into Bitcoin is ready for a massive bull run. According to this guy, he's a T analyst. 2020 to now. Wow, he's got a ascending, um, a rising wedge ready to break out. Maybe it'll break out that way. Maybe it'll break down. 2020, we had massive amounts of money and liquidity coming into the markets. Today, we do not. So that is one thing that you need to know is the market conditions. And maybe there'll be a bunch of money printing that is coming. That very well could be the case. And maybe this does rocket higher. We just don't know it yet because they haven't announced that thing. And people could be positioning in Bitcoin for that to occur. The banks or the people who are the insiders, potentially, or potentially not. I don't have a horse in this race, so I just like to comment on it. Is Fidelity the best all-around brokerage? Yes, in my opinion. I actually like Fidelity. I've used Charles Schwab. I've used TD Ameritrade. I've used a bunch of other ones. I would say Fidelity is the best all around. How much can one partner spend without having to talk to the other about it first? So what is the break-even point there? I would say, if something goes above $500, maybe you should mention something. Like, hey, you know what? I'm gonna go out and buy a car, or something on the lines of that. You probably should mention it. You probably shouldn't just come home and be like, hey, look, I decided to buy a brand new car. It's sitting out front. So be it. But I'd say something like 500 to $1,000, somewhere in that range. Coming on down. If you needed to make an extra 1K before the end of the month, what would you do? I would post more YouTube videos. I would go and do referee or umpiring. I could easily do that. I would ask maybe some of these roofing companies around my neighborhood. I know that they need help. We've had a lot of hail damage. I would go sell roofs, and I bet you I could make way more than $1,000 a month doing that. Maybe even as much as 10 or 20 grand a month if I could sell enough. But that's probably what I do. A lot of opportunity out there to make money, and you can easily pick up side jobs if you have to. What is your biggest waste of money? Well, I'll just say this, all right? I don't spend a lot of the money that is spent every month. It is spent by my kids or my wife or whatever. In my opinion, the biggest waste of money is anything that you spend money on that you drink into your body. So pop, coffee, any of these way overinflated prices for garbage that doesn't put nutrients into your body. It's just a waste, in my opinion. And a lot of them are putting junk into your body. So anything that you're eating and putting into your body, and I would say a lot of it deals with fluids that people buy to drink, are just a complete waste of money. So if you want to be healthy, eliminate all of the stuff you drink that is has a bunch of calories in it. Most of it is sugar water. Get rid of all of it. Just drink water and put your money towards the nutrients in the food to consume. That's the way that I view it. So that is a big waste of money, in my opinion. Another thing that's a big waste of money that a lot of people buy that I do not buy are these little things like trinkets and all this other crap that people buy that they have in their house, but they never ever use it. So anything that you buy that you don't really gain any value from, that is what I would say is a big waste of money. So there are things that I buy that I use a lot, or that I use throughout the year that are not a waste of money that I deem to be valuable to me. It could be a set of tires that I'm using for racing on a car. It could be a couple of spare parts because it's the lead time to get it is a big pain in the butt. Those things I consider to be valuable. Obviously, there's a lot of things that people think are a waste of money, and they are not to that person. So, it is what it is. OPEC is now producing as much oil per day as they did in 2009, except global demand is up over 20% since then. Higher crude oil prices continue to pressure the fight against inflation. So OPEC plus crude production values are in the million barrels per day, and you can see this thing declining quite a bit, going back to 2009, 2003, 4, 5, whatever that is back there. Coming on down, there are two types of people. Those who think spending $5 on coffee will make you broke, and those who spend $5 on coffee and boost their income instead. Which type are you? I don't drink any coffee, and I think $5 on coffee is a complete waste of money. So it won't make you broke, but I also think that spending $5 on coffee will not boost their income instead. So I think either one of those solutions or options is not a good option. But if you like coffee, do whatever you want. I don't really care. I don't drink the stuff. I don't like caffeine in my body just in general. I don't like the highs and the lows. I don't like it breaking up my circadian rhythm. I just don't like any of that stuff. I don't like feeling like I'm on rails. And then eventually, if you drink enough of it, you're going to be dependent on it. I don't like that dependency. So I don't like any of it. You can go throw that coffee in the garbage, what you can do with it, if you're going to give it to me or offer it to me. The bottom is in the freight market, and things may fire from here, bullish oil. So they're looking at outbound tender reject. So this is your trucking capacity is finally reacting to higher freight volumes. Tender rejections are at the highest levels all year at 4%, and you can see it coming on up. So that's good, and it's bullish oil. Only 32% of Americans are saving for retirement in a 401k. Does your employers offer a 401k match? Mine does. I can't even tell you what the exact match is. I know you need to put 6% in to get the maximum match. So I put the 6% in into my 401k at work. I'd get the max match. And then I put a lot of other money in other investments and other 401ks. You do have an option to do a Roth 401k and a pre-tax 401k, and that highly depends on what your income levels are. If you are making, low six figures, you've got a lot of tax write-offs like kids and all this other stuff, then it's probably better to look at a Roth 401k. If you're high income and you make, 4, 5, 600, 700,000, whatever it is, you might be better putting it in pre-tax if you think later on that you won't make as much money after working or so. So it really depends on where you are in your tax brackets. A lot of people may do a little combination of both. They'll do pre-tax, they'll do a Roth 401k, and they'll do a little bit of both. Another thing that you can do is do a Roth IRA where the income grows, or I should say the gains grow tax-free. That is by far the best account, a Roth IRA. Roth 401k is the best account if you can grow it. And you could even take an approach that the younger you are, if you're not paying a lot in taxes, a Roth 401k is really good because you can compound that money for longer. And when you take it out, you can take out more money under the Roth, we'll say tax-free account. Would you ever buy a house sight unseen? Yes, I would. And the reason I would is I would have someone else go see it. So I would buy it sight unseen, but someone else that I trust could see the house, like a friend or my wife or whatever it is. If they said, yeah, this house is good, then I would do it if I trusted them. Question, do you consider it unethical to invest in gambling casino companies making money from other people's addiction? No, I do not consider it unethical. It is also ethical to act unethical in an unethical world or situation. Ethics are made up by human beings, and you can determine what is ethical and what is unethical given a certain situation. So I could understand, or at least I could be empathetic to a position where something is so ridiculous out of the norm that a person could react unethically in a very unethical situation, but I would consider it to be an ethical act. So someone could um, do something that the outer society may deem unethical in a very unethical situation. So what does that mean? If you saw a individual, and this is like just off the wall kind of thinking, if someone is doing something like something very bad to a child, and someone comes in and walks in and they just like they just have a response, I could definitely see that occurring and be empathetic to that position. Does it make it right or wrong? I don't. I'm not the one to judge, because I could easily see the protective instinct of a person or individual wanting to protect that other individual and doing things that may not be, quote, ethical. So it's an unethical act against another unethical act, which, in my opinion, would be an ethical response. How about that? Um, so Bob owns a $500,000 house. He still owes $200,000 on the mortgage. He inherits $250K. Should Bob pay off the mortgage? Well, if the mortgage is a 2.75 or a 3% mortgage, no, I wouldn't pay the mortgage off. I'd let inflation eat it away. I'd take the 250, probably invest it in high dividend paying stocks, and then let the dividends pay off the mortgage, and you'd be far ahead. So, for instance, if you had a 10% dividend yield on average on 250K, is $25,000 a year. Your 200K mortgage on a 3% mortgage is not very much. So you could easily pay that off with the income that you are deriving from the 250,000. You're also able to play the game longer. If you pay that off, you've got money tied into the house. Here, you can take that 250K and generate cash flow with it, and then use the cash flow that it generates to pay off the house and have extra to pay off other things that you want to pay off. It says when you're buying in a correction or bear market, it is smart to dollar cost average. Buying at the very bottom is nearly impossible. I totally agree with that. To get the bottom of the bottom is nearly impossible. So what you want to do, in my opinion, is cost average in. You want to become a sprinkle master. What does a sprinkle master do? Well, you're gonna try to identify where this thing's going to bottom at. It could be at a tip of a falling wedge. It could be towards the head of an inverse head and shoulders. You may not know it at that point. It could be a double bottom. And you sprinkle, 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 sprinkle. You're going to be required to be very patient for that to come out of that bottom. And sprinkling or cost averaging in is probably the easiest, best way to handle it from a psychological standpoint, and also try to get the best possible purchase price. What if the recession has already happened? I've said that before, guys. I said worst is already behind us, and we're already coming back up. People won't know that until it's behind us, but I sympathize with this type of comment. Like, what if the recession's already happened? It could be true. It could already be behind us. Is this sustainable? And this is the growth in real home prices, real disposable incomes, and population. Home prices are here, and home prices in Canada are way above income. I don't know if Canada's is necessarily sustainable, but definitely United States is, given where we are with the home prices. And as the markets become tighter and tighter, there will be a disconnect between home prices and the median income. They're going to diverge. So Canada has a very big problem on their hands because they're probably short a bunch of homes in the market. Another thing is, does home prices have to remain by their income levels? Does the median income level at some point um, become, I would say, insignificant? It might. You only have so many great areas in America and Canada and all these other areas to really build. And I would suspect that those homes in the very great areas will appreciate faster than median income growth. Obviously, that might not be the case if it's being built in the middle of the United States or in the middle of Canada. But if you have a really highly sought after area that is next to water, a lake, the ocean, or something like that, well, I'm sure those are going up at faster paces than a house in the middle of nowhere. Coming on down, it says Rick Rule on Niger uranium. The uranium will be sold somewhere, although the coup may delay global atomic and Goviak's progress at least a year. In his experience, political risk is over dramatized by investors relative to financial and technical risk. And I would agree with that. So that, in my opinion, makes global atomic potential investment if for the patient investor. In my opinion, this remains the single most important chart to understand the current macro backdrop. Bond pessimism versus equity optimism. So stocks and bonds are pricing different futures. The S&P 500 earnings per share are expected to grow by 10% through 2025 per annum. 2-year yields versus the 1-year imply the most dramatic Fed cut cycle ever. So bonds expecting a recession cuts, and then the stocks expecting earnings to chart higher through 2025. And maybe that has something to do with quantitative easing. I don't know. But there is a disconnect between these two. This is expecting a recession, and there's the stocks are saying, you know what, we're going to earn our way out of this thing with a way bigger earnings. I don't know which one's right. I don't think anyone knows with any sort of certainty, but there is a disconnect between these two markets. And the bond market is generally the one that I would probably go with. Stock market, this is what I've got. It says crude oil outperformed gold from the late 1980s to 2008. So that's this run here from the late 80s all the way to 2008. We had an increasing crude oil versus gold ratio. We had a big decline from 2008 down to 2020, and now that has changed. Crude oil has been outperforming gold, and I think that could continue for a good while. So crude oil, I think, is a pretty good spot to be looking. Nat gas as well. If dividends are only for retired people, then why wouldn't you want to invest in dividend stocks so you can retire early? Make it make sense. Well, that does make sense. A lot of people think that they need to take on a bunch of risk, that they need to go into this highly risky stuff that doesn't pay dividends and try to grow that money in some sort of speculative investment. What I'm going to say is you can take the risk off. You can find really good growing companies that pay dividends as well in a market condition that's very favorable for that business, like commodity companies. I don't think you need to take on all the risk. So that's my opinion there. There are a lot of dividend stocks that I would be piling into at this time. If you're part of the community, obviously you guys well know which ones I really like. But I'm doing that, and I think there's a bunch of upside to them as well. Who wants an electric car? I'll be the last guy on earth with the sweet sound of a purring V8. I don't want an electric car necessarily. I just want a car that works and is cheap to operate. That's what I want. And then for the race cars, I mean, I'd consider an electric car, but it needs to be lightweight and it needs to be within a budget. All this stuff I own is pretty cheap, and I just can't justify spending a lot of money on a car. What is the worst thing that's ever... Okay, I've already answered that one. So we'll end it there, guys. That's what I've got for today. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website if you'd like. And we'll end it there. Coming up this next week, we're going to have a Sunday at 5 p.m. Mountain Standard Time question and answer session. And yeah, that's all I've really got. So we'll catch you next time. This is Finding Value.